Alright, so in this video, I want to pretty much go through and talk about market structure, pretty much show Bitcoin's market structure on multiple time frames to kind of, demonstrate how I mark out market structure and, some of the ways that I use it, some of the reasons it is beneficial to my trading. For example, it can help you to create a bias. It can give you key levels to pay attention to by looking at these market structure points. And yeah, overall, just being aware of market structure is a pretty key part in trading, and it has become a more key part in my trading as of recently, the more I've been using it. So basically, I want to start out on the higher time frames, go over the most significant market structure, and then work our way down because there is lots of market structure going on. There is weekly market structure, and then inside of the weekly market structure is going to be lower time frame market structure, whether you want to call it daily or 2 day, whatever time frame you can mark it out on. But basically, inside of the larger trend is going to be lower time frame market structure, and then inside of that will be even lower time frame market structure. So starting off on the weekly time frame, this is the primary market structure essentially that I have marked out. And technically you could say that this part in the middle here is irrelevant, and actually it kind of isn't market structure when you go farther back. One of the things with market structure is finding a point to start at. So, for example, if you started pulling the weekly market structure here, then it would be, down, up, put in a lower high here, put in a lower high, lower low, and then break a structure. But if you go, to the left more, if you start from back here, you could say that this is the market structure. We had higher highs, higher lows. I guess you could call this higher high, higher low, even though it's very tight. It doesn't really matter since we didn't break it over here. We kind of like double bottomed here, maybe even SFP'd it. But then we had higher high, higher low, slash double bottom, slash SFP. Either way, it doesn't matter because we didn't break market structure here. We didn't close weekly candles down below this low. So we then put in higher high and broke structure when we crossed down here. So the reason it doesn't actually matter too much is because we had this lower high and lower low. So we have a clearly defined market structure point, whether you're looking at market structure like this, or if you're looking at it as if this is just one move down, then lower high, lower low. Doesn't matter. Either way, we still get to the break of market structure right here. And since getting this break, we have not done anything else in terms of this primary market structure. The next thing would either be us putting in a higher low and then a higher high, basically confirming this as a higher low by creating a higher high, or us just coming back down to break the last lower low. Those would be pretty much the two, possible significant developments in terms of this primary weekly structure. And so I can mark out the high and the low as being pretty much the points to watch. Because if we come up to break this high, then this is a confirmed higher low on the weekly. And you can also pull internal structure here. Shout out White Phoenix for the terminology, because I didn't know what to call this before hearing internal structure, so that's just what I'm calling it. But you can, basically pull the less relevant structure, just kind of starting from a swing point. So starting from this low, you can pull weekly market structure, and while it doesn't matter as much as the primary market structure, it can still be significant. So, it doesn't hurt to have it marked out. And so the only thing that we get from this internal structure is this point right here as being a weekly internal high or low. So, in order to maintain this internal uptrend, we would not want to break this low down here. And, if we put in a low and then we break this high up here, then the internal high or low would move up to here. And also the primary one would as well, because this high up here is also the primary higher high. So, yeah, pretty much looking at weekly market structure, the market structure points that we get from it are this high, this low, and this low being an internal market structure point. And aside from the significant market structure points that we have marked out, the market structure gives us another significant bit of information, and that is basically the developments in market structure. And the main one right here is that we have a bullish break of primary structure. So that is something significant. That is something that you may want to take into consideration for shaping your bias. And another thing you can take from that is technically price can come all the way back down and still put in a higher low so long as we do not close below this low right here. So even ignoring the internal structure here, even if price comes all the way down here, we still could technically put in a higher low on the weekly and continue the uptrend. But you may also say that it would be a sign of strength if we could also continue the internal structure as well as the primary structure and put in a higher low relative to this internal market structure point and then continue structure like that. And if that happens, let's say this scenario happens, then the primary market structure point would move to right here because we have a higher high, higher low, higher high on the primary market structure. And then from there, we can go down to a lower time frame. I like to go down to the daily, and we can mark out daily market structure. So for daily market structure, I chose to start it from this point because I was aware of the fact that we technically had a daily break in structure bearishly right up here when we broke this last higher low right here. We had a break in structure, but then we just broke back up and broke the daily higher high. So it was essentially a fake out in market structure. And so I just chose to continue market structure from this low down here. And looking at this, we had, higher high, higher low, slightly higher high, even though it was an SFP, but I'm still counting it. And then higher low, higher high, and break of structure down here. And it actually doesn't matter whether you consider this part valid structure. Doesn't matter because whether you're looking at this as the higher low or this as the higher low, we did not get a break until right here. So either way, the lower low on the daily market structure is going to be right here. So for this, we just have two market structure points, the daily higher high up here and daily lower low. So since we broke the bullish market structure on the daily, what can we gather from this information? Well, we can say that most likely what will happen next if price is going to keep the integrity of the structure is that we will put in a lower high and then a lower low to continue the downtrend. So there are pretty much two main takeaways from this market structure. Number one being the market structure points, and number two being that we have broken the uptrend and begun a downtrend. So that can kind of shape our bias a little bit. And so now moving on to 4-hour structure. The reason I mark out 4-hour structure is because, even if you're kind of looking at the same structure as like a higher time frame, there could be some fine details that make significant differences when it comes to market structure. And, for example, this is the daily market structure I was just looking at. But if I turn on the 4-hour market structure, it looks very similar, except for the fact that we have this right here, higher high, higher low, higher high. And we can zoom into the 4-hour to get a better look at that. And this makes a significant difference in market structure because now we did not get the break of market structure right here. We got it much earlier. We got the break of market structure right here. So we broke market structure, put in a lower high, and then a lower low. And down here you can see we put in a lower high and then a lower low down there, making the market structure point this high. And then we had a bullish break of market structure when we put in this high. But then from there, we did nothing until we came down to break this low. Basically, this was a fake out, or I wouldn't really call it a fake out because, this did produce a significant move to the upside after we broke market structure. But, you have to look at the context. On the daily, we had just gone from market structure point A right here to market structure point B, and then we're trading inside of it. So on the daily, there was no developments in market structure. On the 4-hour, there was, but the higher time frames outweigh the lower time frames. What this does, looking at this 4-hour structure, is it moves the market structure point down to right here. This is the 4-hour lower high. So, that gives us slightly different market structure points than the daily. On the daily, the MS point is up here. So, on the 4-hour, if we either A, get a move down to break structure here, then, this would become the 4-hour market structure point. Or if we get a move back up to the upside, we could break market structure slightly sooner, although it doesn't make that much of a difference because, this high is so close. And maybe from here, you could even mark out like internal 4-hour market structure starting from this point. So maybe you'd say you had high, low, lower high, and then lower low. And that doesn't really change much. You maybe could say that this right here was the lower low and then lower high, but that is not really structure right there. Overall, just looking at this move, it is, overall just one move to the downside. This wick doesn't really mean much, so I would not count that as structure. But maybe you even want to switch up your internal market structure a little bit and maybe just take it from this point up here, since that makes it a little bit better. You have high, low, lower high, lower low, lower high, lower low. So the 4-hour market structure point is right here, and we just SFP'd it, I believe. So that is something somewhat significant that you might want to take into consideration. We SFP'd the 4-hour internal market structure point when taken from this high. So maybe that means that the attempt at a 4-hour uptrend was a failure and that a 4-hour downtrend will continue. Again, it's just internal structure. Does not guarantee that this has to happen, but it is something that you can take into consideration. And now, zooming in one more time, I do have some market structure points marked out locally here. This is hourly market structure, so, hourly internal market structure technically, because, you're just taking it from this point. You have an uptrend here clearly, and we broke that uptrend when we put in this low. Now let me actually go to the 1 hour so you can see this structure. And from here, we put in a lower high and a lower low. So we have a market structure point that is relatively close to us on the 1 hour. And the fact that the hourly lower high and lower low are relatively close to each other is potentially beneficial for me as a trader, because the significant market structure points, at least considering this structure, are very close to each other. And so, in all likelihood, we will either hit the lower high or lower low soon. And, at these market structure points, you can look for SFPs. That is a sign that the attempt at a break-in structure was a failure, and sometimes that results in a move to the opposite market structure point. Or, in terms of this market structure, if we get a break-in structure here, then we could expect a higher low and then a higher high, because we broke the downtrend. Maybe we will now continue or begin an uptrend. So that is essentially how I like to mark out market structure. You can do this, on low time frames, like on the 2-minute, just to kind of look at local market structure, and if you're scalping, that can be significant. In terms of getting a higher term bias from market structure, I like to stick to the higher term levels, the higher term market structure, and you can kind of create a bias from this. So, what would my bias be, for example, from all of this information? Well, we know that we have broken the weekly downtrend, and we can potentially come all the way back down towards these lows to put in the higher low that we are potentially expecting. But we also know that we have a bearish break in the daily structure, and that may mean that we will, continue this daily downtrend until we put in that weekly high or low, wherever it's going to be. Maybe it ends up being above this weekly market structure point. Maybe it doesn't. Maybe we work our way all the way down, back down towards like 15K or wherever we're going to bottom. So although the weekly market structure had a bullish break, the daily market structure right now is bearish. So that is something to consider. All right, well, I think that's all I wanted to go over in this video. Thank you all for watching. If you enjoyed, please consider leaving a like, a comment, and subscribing to the channel. I really appreciate all of the support, and I'll see you all in the next video.